Markets stumble for the third day, slipping sharply from the day's open. Nifty loses a grip on 25,800 amid weakness in financials, and retail pain is deeper in the broader end of the market. Mid-cap index drops over 1% as well.
A solid day for IPOs. Meesho makes a stellar debut on the bourses. The stock pops 50% over its issue price. Aerospace components maker Equus also delivers a decent listing, opens at a 13% premium.
And Interglobe Aviation shares a decline after government curtails 10% flight in high-frequency routes. SpiceJet Air India plan expansion with 170 additional daily flights. Delhi High Court pulls up the government, asks if authorities are helpless to take action against Indigo.
"26 years of CNBC-TV18.
Hello and welcome to Markets Forward on CNBC-TV18, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vinny Motiwala. With me is my colleague Sonal Bhutra as well. Sonal, it's been a day where we again seen a bit of a fall coming in, right? We started in the green. There was green for the first half of the trading session, and then we saw that fall. Now Nifty closed at 25,750, around that mark, 750, 760 levels, down around 81 odd points in today's trading session. Even the broader end of the market, that saw a bit of a sharper fall as well. Look at the Nifty mid-cap down more than 1%. Small cap too is trading with sharp cuts in today's trading session. So today we've seen again a bit of a fall today.
Oh, yes. So it's the third straight day of falls for the markets, off from the highs, opening highs that is, and we failed to hold on to that 25,800 mark. What did do well? Nifty metals, that gave some support, but honestly, that did not work for the market so much. The advanced decline ratio for quite a bit of the trade, or for a larger part of the trade, that was in favor of advances, but did not hold through. We ended with more declining stocks versus advancing stocks. So there you can see it finally merged, and then we saw declining stocks outpacing advances as well. The mid caps down 1.1%. The small caps too did not do so well. So the selling continues, but we'll keep tracking that for you. For now, let's tell you what we have in lineup for this. What we have in lineup for you today. We start with top movers and shakers of the day with Hormuz. Hindustan Zinc, that is the stock on our radar, rallies after silver prices hit all-time high. Meesho made a stellar debut with a 46% premium. Swiggy floats a QIP to raise around 10,000 crore rupees. And last but not the least, we delve into the key market events to watch out for tomorrow's trading session. So let's start with the first segment of the day. Hormuz Fataka is joining us now from the big wall with the top movers and shakers of the day. Hormuz, over to you.
Oh, yet another forgettable day for the markets, wasn't it? And broader markets too feeling the pinch right now. And mid-cap IT was no different. That Persistent, Coforge, Oracle Financial, all of them ending at the lowest point of the day. Losses of anywhere between 3 to 5%. But the only one sector that bucked the trend though today, and convincingly at that, was the metal names. Even though they came off the highs, but Hindustan Zinc ended around 4.5% higher. Vedanta, as a result of Hindustan Zinc, ended around 1.5% higher, coming off the highs of the day. Lloyd's Metals also did well, ending at the highest point of the day with gains of around 3.5%. But the EMS companies were spooked, and they continue to be so, and particularly led by Keynes and Dixon. Keynes was up 14% yesterday. It has given up 11% of that gain and ended at the lowest point of the day. Dixon ended at the lowest point of the day as well, almost 9% lower. It's now down 35% from its peak. Amber and PG Electroplast too, they did some recovery from the lows, but still ended in the red. Following the struggles of the market, the capital market names continued to sulk as well. BSC, MCX, CDSL, all of them ending at the day's low, 2.5 to 5% lower. And lastly, of course, stocks that ended at a 52-week low in today's session: Inox Wind, Shakti Pumps, Havells. Remember, all of these names have seen a very, very stellar up move for a better part of 23 and 24, and all of these names are now coming off very sharply from those highs.
Okay, Hormuz, thank you so much for taking us through the stocks that were moving around in today's trading session. Like you rightly mentioned, another forgettable day, but that was not a forgettable day for Meesho because they made a stellar listing on the D Street today. Look at it, 46% premium over its IPO price, with the company's market cap now hovering around the 76,000 crore rupees price. when you look at it, the issue was subscribed nearly 80 times with strong demand across the board. Meesho's management told us that disciplined capital management and monetization will drive profits in the future as well. Listen in.
I think on the path to profitability, as we have kind of been mentioning, we foremost focus on free cash flow as the metric that we look at. I think over the last 2 years, if you look at it, we have been free cash flow positive. Last year, we generated close to about 1,000 crores of free cash flow. If you include interest income, excluding interest income, about 600 crores. So I would say that the way we have also built our business has been disciplined in terms of capital efficiency and capital discipline. And I think as we continue to make more progress on some of our monetization levers, be it ads, logistics, some of the new ones that we are working on, we'll keep making more progress towards our other profit metrics as well. The way we have built out Valmo is to kind of serve one purpose, which is to be the lowest cost provider of logistics in the country to us. And that kind of continues to hold true. So we don't expect, or we don't kind of aim for any percentage number in terms of how much of our volume should go to Valmo or any other partner. I think we're most focused on bringing the cost of serving customers and sellers down every single year, and happens with Valmo, happens with other partners. We're actually okay with both. The objective function is cost. So whatever helps us bring down the cost, be it Valmo or any other partner, we continue to kind of work with them and broaden the logistics ecosystem.
All right, that's the word coming in from Meesho's management. But let's get in Mangalam Malu, who is joining us with a report card of the company's financials, valuations, and a lot more. Mangalam.
Well, you know, there are three major reasons why Meesho saw the kind of stellar listing that we've seen in an otherwise gloom and doom sort of market. What are those three things? The first one, obviously, there was strong demand for the issue. The overall subscription was around 79 times, led by QIBs at around 120 times. We saw decent demand coming in from HNIs as well as retail as well. The second part was, one that it's a very unique business model, a truly Bharat-based e-commerce app. If you look at it, there are 87% of their users that come from outside the top 8 cities, 55% women. At the same time, they don't charge a commission to buyers or sellers or a platform fee, and they make most of their money from logistics as well as advertising. And there too, there is scope for margin improvement going forward, as the management had told us. The third most important part is that their financials. While they've been, reporting losses on the EBITDA and net profit front, the company's been free cash flow positive, and that's the metric that they've been highlighting ever since the issue came out as well. Last year, they did a free cash flow upwards of 1,000 crores, and they believe this is a number that will grow. So long as the net merchandise value, contribution margins as a percentage of merchandise value grows, and the free cash flow for the company improves, along with the new revenue streams that they're seeding, they believe that all the other markers like EBITDA and net profit will turn going forward too. At the same time, the global benchmarks for contribution margins are close to 8 to 10%, and we have a fair amount of headroom for growth as well. 700 million smartphone users, only 250 million of them shop on e-commerce apps. So truly a unique business model with decent financial performance so far compared to the stage of life that they're in. And all of that, despite a 60% up move that we see. If you look at their price to sales multiples, it's somewhere between Swiggy and Trent. Meesho is at around 8 times. Eternal, Lenskart are 11 and 14 times. Obviously, DMart is around 4.5, 5 times as well. It doesn't make the kind of profits that all these companies make, but obviously on a free cash flow basis, that's a lot more comparable. And that's why the stock is doing extremely well, holding on to.
Okay, thank you so much for that, Mangalam. But let's put the spotlight also on Swiggy, right? The shares of Swiggy gained after it launched its QIP to raise 10,000 crore rupees. The floor price is set at around 390 rupees per share, a 2% discount to Tuesday's closing price. However, the indicative price is around 371 rupees per share, lower than its issue price of 390 rupees. The quick commerce platform now is aiming to bring its cash balance at par with some of its peers like Eternal, Zepto, and this is mainly to boost the growth. When you look at it also, the cash that Swiggy post-IPO, post-QIP could hold would be 17,000 crores approximately. Eternal already has around 18,300 crores, and Zepto somewhere in terms of, as per reports, is around 8,500 crores. So will be interesting to watch out for on that front, Sonal.
Yes, so let's do one thing. After we have spoken about some of these stocks, let's go across to our guests, Mayuresh Joshi, Head of Equity Research at William O'Neill, and Jay Thakkar of ICICI Securities to understand what's their take on some of these names. Good afternoon, guys. Thank you so much for joining in. Mayuresh, let me come to you first up. What do you make of Meesho's listing, that stellar gain that we saw? Do you think there is still valuation comfort on this one? And also Equis, that was the other listing that we saw today.
Afternoon, Sonal. No, again, I think the listing was stellar, no two ways about it. But the only issue is that it is run up now significantly. I think what Mangalam probably mentioned in terms of the platform and the model itself, I think it's a growing business and obviously it's a huge landscape in terms of opportunities that are and will be available over the next few quarters and years. However, I think in the best of their efforts, how do they probably ensure that the operating performance and the bottom line growth turns out to be profitable is something to be seen. I don't cover the other one, so very difficult to monitor.
Okay, that's a word at least coming from Meesho from Mayuresh. But Jay, what's your view coming in for Swiggy, right? QIP coming in, Swiggy, Eternal. Are the trends changing? Could we expect more up move now for Swiggy as well?
Hi, good afternoon to you, Vinny, and Sonal. Well, see, as far as the new age companies are concerned, especially the one which you just mentioned right now, I mean, overall, if you see the DII's flows, I mean, of last 1 year or so within this segment, then it has been with an average of around, say, 15,000 crore per quarter. So, if you look at last 1 year or so, then we have seen more than almost 60 to 70,000 crore that has been infused in this new age companies, as far as DIIs are concerned, through mutual funds, right? So we have seen
I think
a recovery in most of those names, whether it has been Swiggy, Eternal, ATM from the lower levels. Flows, I would say, Vinny, as far as new age companies are concerned. But I think as far as Swiggy and Eternal are concerned, these two names have seen a significant run up, and now overall in the short term, I think based on the quantitative data, based on the volumes, based on the FNO data, as far as Eternal is concerned, I think these two stocks are likely to see some correction in the near term of the entire rise which we have seen right from bottom. So it's time for some correction to consolidation in companies like Eternal or Swiggy in the near term. So I would say that if at all there is any bounce, it should be utilized as an exit or a selling opportunity.
Okay, all right. So that's Jay's take on Swiggy. But let's move on now. Shares of Hindustan Zinc rallied after silver prices touched an all-time high. The precious metals price is now hovering around $61 per ounce. Silver contributes roughly 40 to 45% to Hindustan Zinc's operating profit. Nigel D'Souza is joining us with more details. 4.5% higher on this one. Nigel, tell us more.
Well, Hindustan Zinc, that's the outperformer in today's trading session because of a few factors at play. Silver prices have hit its highest levels ever at around $60 per ounce, and that explains why that stock is up and about. Well, to give you a couple of numbers then, the gold-silver ratio at the start of this year, well, it had gone to more than 95 times. That has cooled off to sub 70 times. That's gold to silver ratio. And in fact, the ratio that we're seeing sub 70 times, that's the lowest that we have seen in the last 4.5 years, which explains how silver has actually caught up in this rally. At the middle of 2025, actually gold prices were up by more than 40% and silver was lacking with a gain of only around 15%. What's happened since the middle of 2025 is that silver actually has gained more than 60%, while gold is up closer around 25%. So that catch-up trade actually has taken place. Remember, silver has both the qualities, right? It's a precious metal, it's an industrial metal as well. It's used, for green energy as well. So that explains why silver has been doing quite well. And there is likely to be a bit of a deficit that plays out. And the only listed player to play this bounce on silver prices is Hindustan Zinc. And that's why that stock is doing well. To give you another number, the EBIT contribution coming in from silver is 40 to 45%. And going by the kind of pricing we're seeing on silver, well, it could be even higher in the time to come. Remember, we have a rate cut that's in the offing later tonight. So that's what's spurring sentiment as well, because that's what could keep silver as well as gold prices elevated. Hindustan Zinc gains, and because Vedanta has a stake in Hindustan Zinc, well, that as well participating in today's rally. Both those two stocks doing well.
Thank you so much for that, Nigel. Vedanta and Hindustan Zinc. Mayuresh, your thoughts coming in here on the metal pack as well as Hindustan Zinc as well as Vedanta.
No, I think it's a logical move, Mini, because 40 to 50% of the bottom line contribution comes in from the silver contribution, and price is higher. That's going to reflect very, very positively if they stay at elevated levels. Again, I think the expectation largely is that Hindustan is also expanding its silver output capacities. So as capacities come on stream over the next few quarters, and obviously, I think the impact in terms of higher silver prices will get reflected on bottom line. Vedanta owns Zinzing, so I think an indirect play of playing silver through Vedanta.
And from a technical viewpoint, Jay, what are you making of metals? They've been outperforming.
Absolutely. I mean, we have seen Sonal overall metals really outperforming the market since past 3 to 4 months. And recently, I mean, we have seen yesterday a few of the metals globally corrected by 1% or 1.5%, and because of which there could be some consolidation going forward. If at all there is a short-term up move in the DXY, could generate some pressure on the metal names. No, but the bullions looks absolutely positive, I would say, as far as gold or silver is concerned, and that is the reason we have seen this kind of a move coming in Hindustan Zinc, which I think could be one of the top bet right now. The stock has really underperformed its peers, or I would say the overall sector as of now. It has come off its crucial resistance of around 500, and now I think that it has formed a good put base there. So 540, 560 seems to be a good target in the near term, at least for the December series for Hindustan Zinc. Now we've seen a good long build up there as well. And as far as Sonal overall sector is concerned, I think the sector might go into some consolidation because it has already seen some good run up in the near term. And now we have seen the market correcting or getting into sideways consolidating mode. So some profit booking can't be ruled out from the metal space. If at all there is a sharp dip in DXY, then yes, the metals can continue to bounce back, else it may consolidate. But Hindustan Zinc can be an outperformer.
Okay, thanks so much for the view there. So thank you so much, Mayuresh, as well as Jeff, for joining us on the show, as well as helping us understand in terms of the moves that are expected in markets, as well as individual stock names. But let's move on and talk about Interglobe Aviation. The government has curtailed Indigo's winter schedule by 10%, and this comes after the DGCA mandated a 5% cut. The Delhi High Court has pulled up the government and questioned why the centre failed to prevent airfares from soaring exorbitant levels, and the court also directed Interglobe Aviation to issue refunds and compensations for cancellations at the earliest. A four-member DGCA panel will also be probing the operational crisis. The panel will be summoning the CEO of the company to understand what is expected of them, and they will examine the incident as well. Let's go across to Madhya for the take on what is happening here.
Well, there are three major updates that we are tracking. First, the Civil Aviation Ministry has directed Indigo to cut 10% of its winter schedule. But what we now need to see is whether this cut will actually affect existing flights, because Indigo had sought additional slots for the winter season. And the bigger question is, can the government really afford to cut capacity in a market where demand is at record highs and no other airline has the spare fleet to absorb passengers? Second, Indigo CEO, as you were mentioning, along with senior officials from every key department, has been summoned by the DGCA on December 11th at 3 p.m. The regulator wants Indigo to present a clear update on 6 areas: flight restoration, pilot and crew recruitment, refunds for cancellations, baggage return, timely information to passengers on cancellations and flights, and rerouting of disrupted passengers. This is the strongest monitoring Indigo has faced in years. And the third, that our colleague Ashmit Kumar has been reporting, the Delhi High Court has made some sharp observations. The court asked the government why, instead of taking action against Indigo, it has given the airline more time to comply with the new FDTL norms. The judges questioned whether the government is helpless when an airline fails to hire enough pilots or gives an inaccurate picture of crew availability. The DGC and the ministry told the court that the exemption to Indigo was given unhappily and reluctantly, because without it, the collapse would have had a cascading effect across Indian aviation. They've also made it clear that the exemption can be withdrawn at any time. Reviews will take place every 15 days, and they expect flight schedules to stabilize by tomorrow with complete restoration in about 3 days. They stressed that this is not a knee-jerk moment and that public interest must remain the top priority.
Thank you so much for joining us with all those important details, Madiha. But with that, it's time for a short break. When we come back, we'll get to the top corporate voices along with the key market events to watch out for on the other side. Stay tuned.
"26 years of CNBC TV18. "26 years of CNBC TV18.
Welcome back. You're still tuned into Markets Forward. Let's talk about some corporate conversations that we had on the channel today. Equus made a decent debut on D Street, listing at a premium of around 13% versus its issue price. CEO Arvind Melagiri told CNBC TV18 that the company's net debt will stand around 100 crore rupees post-listing. He added that the aerospace division is currently operating at nearly 7.5% utilization, and the long-term vision is to build a balanced 50-50 portfolio between aerospace and the consumer segment.
We also had the management of NephroPlus, India's largest dialysis network, saw a weak demand for its issue on day one, which opened. The company's management told CNBC TV18 that its international market continues to operate at significantly higher prices and price points compared to India, and the revenue from global business will remain around the 40% mark. The management expects margins to improve steadily as volumes rise across the operations. And before we wrap up this edition of Markets Forward, let's take a look at the key events to watch out for in tomorrow's trading session. So first up on the global front, let's talk about the US markets. There's going to be the initial jobless claims data. We'll have the trade balance data as well. Obviously, tomorrow morning, we'll be reacting to the Fed's decision that will come in tonight, but that is something we'll watch out for. Corporate action on the domestic front. We have Ashana Housing Finance. The board will be meeting tomorrow to consider a fundraising plan. We have IFL Finance that is also meeting. The board will be meeting to consider fundraising, and this is going to be through NCDs. Som Distilleries, the board will be meeting tomorrow, and this is going to be to approve a rights issue. So key three stocks that we'll be keeping an eye out on the back of some corporate action. Other than that, Sensex weekly expiry tomorrow, so keep an eye out on that. US-India trade talks, the delegations that have come here, those continue even tomorrow. So 11th of December, important key commentary in case we see that coming in. Indigo CEO has requested an